there's only two ways of looking at it. Either the institution becomes complacent enough to let its own client go to any other institution who could meet its demands in a way that is required, or the institution decides to diversify itself. And the product diversification or portfolio diversification doesn't come in easy, because there is always a risk element that is linked to it. End of the day, the portfolio at risk, the recovery rates, the rates of write-offs would determine the performance of the institution. However, if right efforts are put in, those concerns can be addressed. So in majority of the institution, as much as housing is linked to diversifying its own portfolio, it's also being treated as a risk mitigation tool. So when we talk to these institutions, there was an interesting scenario that came up. Housing, unless like mortgage, is not a 25-year loan product. It's not even a 10-year loan product, because your clients have different needs. Some clients do require money to purchase new homes, while there's a client base that also requires money to improve their existing conditions. And there's also a client that requires to incrementally expand the existing brick and mortar place or the shelter that they already have. So the housing microfinance piece largely touches on the later two components that I mentioned about. Either it's incremental extension of the existing living space, or it's about improving the existing structure that is already there. An example, add a wall within the room that the person currently lives in. Based on that, when we look at it, the housing product comes down to almost anywhere between a 24 to 36 month loan product, where the interest rates are either equal or lower than their other financial products and services. The interest rates are determined on two factors. In majority of the institutions that we talked about, housing is treated as a loan product for repeat clients until now. And when you're treating it as a repeat client, you also want to ensure that the burden of repayment is well managed. As I said earlier, the risk mitigation model is critically important. You cannot go beyond what the disposable income capacity of the end user is. So overall, what we realized that almost 57% of the institutions said that their housing products are much more profitable than their other loan products, because the tenure is longer than the 6 to 12 months loans that they were already giving for enterprise or income generation activities. And then there was another group that believed that housing is much more profitable. All in all, there is no reason that housing cannot be considered as a product that doesn't improve the livelihood and the income of the clients. Interestingly, during the times of COVID, I would like to share here the survey that we conducted in all the islands of the Philippines, that is Luzon, Visayas, and Mindanao. We realized that the families that had taken a housing improvement loans were also able to run some small businesses from their houses during a time where the country was in lockdown. And having an improved house also resulted in something that we call as home-based income. So the correlationship between housing and income is now starting to get a lot of traction because of the COVID pandemic that we have come across. And if we look at all the countries' subsidy packages that have come out, or the recovery packages that have come out, housing construction as an industry is there, because it is said that for every dollar that is invested in housing, 60% of that goes towards income generation, which is definitely a good sign. So then, if the potential is so huge, why still are the challenges? It's simple. There's a lack of capital because for an institution to lend money, they need capital supply source. Either that capital can be made available from the savings that these institutions generate from their clients, but not all institutions in all countries have the regulatory approval to even mobilize savings. So the capital requirement is definitely one of the factors that does hinder institutions who enter into housing. The other key concerns are because of the lack of understanding around housing microfinance itself. Because as soon as the word of housing is used, the inclination is towards mortgage financing. And mortgage, as I said, tends to think about 10 years and above, tends to talk about loan sizes which at minimum are above $4,000 to $5,000 and are very much linked to the regulatory and the legal environment of the country to liquidate. Whereas housing microfinance focuses on clients who have informal income, may not have the land title available, but there are proxies, as Jatin mentioned, that could be used as an alternative. Because at the end of the day, you need to determine or you need to find a way to evaluate if the person owns the place that he's living in, which could be done through the traditional systems that we apply for loan evaluation by talking to the neighbors, by understanding the family's history within a certain areas, or also to consider some of the utility bills that are out there to determine if that place is a place of regular residence for the client who's applying for a loan. Taking all these things into consideration is where the risk mitigation formulas come in. And end of the day, if we are able to define the risk, then we can define how to mitigate it. And the only way to define risk is to understand what the needs of the end user are, what their behavior patterns are, and what the capacity of your own institution is in order to deliver a financial service. When we talk about financial services, there's definitely a word that comes in for the non-financial services, which Jiten would be talking about on the next slides.
Thanks, Naeem. So I think we wanted to touch upon one more interesting topic, which always goes hand in hand with a housing microfinance loan. It's basically about embedding the non-financial services into the core financial product. And this is the core feature where housing microfinance is different from traditional income generation loan. So what we found in the survey, almost half of the institutions, they do offer some sort of non-financial services along with the financial product. And these non-financial services are centered around helping a low-income family to manage their construction process. Some of the examples which I want to touch upon is like a budgeting and a cost estimation. A family often has a grand plan of developing a house, right? But their resources are constrained. So what they need is a financial sound advice from a loan officer, from the front end team to manage their construction process so that they can, divide the construction plan based on their capacity to pay. The other core input which they need is around the selection of materials. And this is particularly important in the areas which are disaster prone. Because for a financial institution, they don't want a low quality house for their clients, right? The social objective is always there for a microfinance institution. So they would like clients to have the optimum usage of a loan, right? And this is a very interesting topic. We have been seeing a lot of innovation here, and this is one of the differentiating factor for a financial institution, because in some of the mature markets, the housing microfinance offering is more or less similar, but this is one area where the differentiation happens. And with the advent of mobile technologies, we have been seeing some of the exciting initiatives around consumer education that help the family to manage their construction process effectively as well as efficiently. And as a Terwilliger Center, we are really very excited because this is one area where the institutions are also able to maintain their competitive advantage, and the digital technologies are really making this possible. So yeah, I think that's all we had to share with you. Please feel free to chip in with your questions. We'll be happy to answer based on our experience.
Jiten, before we jump into questions from the participants, within the panel description, we have a case study that talks about the journey of Negros Women for Tomorrow's Foundation, on how they went through this exercise of designing a product and how it impacted the end users. Do you want to touch base a bit on what the case study covers, and since you were leading that journey with the institution, what were some of the key challenges that you came across, and how did you address them?
Right. So thanks, Naeem. I think so. Working with Negros Women for Tomorrow's Foundation, which is one of the biggest players in the Philippines microfinance industry, they have more than 500,000 borrowers. Uh, uh, the need of housing is really huge in a country like Philippines. One of the studies that we undertook, there is a overall market potential of $13 billion for microfinance institutions, right? So that was, one of the biggest motivating factors for NWTF to launch a housing product. And then around 5 6 years ago, when there was a typhoon Haiyan, which brought a massive destruction in the country, this institution already pilot tested a small loan. It was a temporary loan product meant for the reconstruction. So institution had a decent experience with it, and then they also partnered with a major cement company where they were able to provide both the access to finance as well as access to material simultaneously to a family. So both of these initiatives provided the right set of experience to Negros Women for Tomorrow's Foundation, and then they were able to undertake a new product development journey with the help of Terwilliger Center. We did follow a human-centered design approach with them, where we co-ideated a solution with their team. We first tried to understand the pain points of a family. Uh, we tried to understand, what are their needs and preferences, and then along with the team of NWTF, we were able to co-ideate a solution which was, completely reimagining their housing finance offerings. So we developed a prototype, and we were able to conduct some of the lean experiments to determine the right set of product market fit. And once we had that, we again went into, some of the viability and feasibility analysis for the formal approval of the product from the NWTF board. Then after the board approval, we started small. We just pilot tested a new product in just 4 of the branches, and that was a great learning experience for the team. Even within the pilot testing, we were able to conduct some of the lean experiments where we were able to determine the right set of messaging which should accompany with the financial product, the right set of non-financial service which can be bundled together with the financial product, and also the other need which came up, during the pilot testing was training of the front end sales force, because traditionally MFIs in Philippines, they have been offering income generation loans, right? So it was altogether a behavior change exercise for us to convince the sales force to get into this housing space. Initially they were quite reluctant, but I think with the support of the management team, the one of the key things which stood out was we involved the Salesforce team in the design of the product. And when they co-designed the product along with us, they felt some sort of accountability. They felt some sort of responsibility to make this product a success. And even without any incentive schemes, we had a very good pilot testing result. Almost we were able to distribute around 850 loans in a span of 6 months' time, and the average loan size came somewhere around $600. And the impact was really visible in the field when we captured the client stories. Families which were struggling to have a decent shelter, they were able to do it because of this particular product. It improved their disaster resilience. Generally face 20 typhoons in a year, and often families do not have the right set of housing structure, so the flood waters would come inside the houses. So this is really a major pain point for a low income family. And with this kind of product, we really found some tangible impact in their lives. They have a decent place where their children could study, right? And so that they can prepare well for the future, and are able to get a better livelihood for themselves, as well as for the entire family. So yeah, I think the experience was really good. Two challenges which stood out during this journey was definitely convincing the Salesforce team to get into housing finance space. The management team, the board was already committed, but I think the front end team is very important in the microfinance industry, which always relies on a high touch model. So that was one of the major challenges. The second major challenge was, bundling of a non-financial service, because as we already highlighted, that access to finance is definitely a major pain point. But then the family also needs a sound construction advice where they can manage the construction process.
Wonderful. Thanks, Jatan. Jatan, this also takes me to the fact of the institution getting too confused between as soon as the word construction comes in. One of the things that I have interacted on a multiple occasions is when you're talking to an institution, the first thing they would say is, I understand that there's a need for a house. My responsibility is to provide money, but I really don't want to take the responsibility with regard to, say, for example, uh, that what actually I want to play my role as, say, for example, in the construction piece. Uh, but interestingly, before I get into that one, I see Patrick McAllister having a question posted here is, how much does it cost to develop a housing product, and are there subsidies available? Uh, I think the most important thing is that you need to treat the designing of housing product as a core product development exercise within the institution, for which you need to get experts on board. The subsidies could be looked at from two fronts. Either it could be looked at from the donor community, who is willing to support the expansion of housing services within the ambit of financial inclusion. So I definitely see a role for donors, either from the corporate community or from the development finance institutions. Uh, and from our perspective, the reason it becomes important is, let's not forget that the microfinance institution comes from a history of designing small products and services which are largely built around the experience that they have gained in-house or have been taken as an off-the-shelf solution when it comes to looking at models that have been promoted by the likes of ASA and the Grameen's within the financial inclusion sector. So there's a unique skill set that is required to design a housing finance product, either within the microfinance category or through small construction activities. So I do see a role for the donor community to step in. In addition to that, I also see a role of donor community to look at it from an investment angle, because the more institutions that they have been able to support to design housing products and services also provide them with an opportunity to invest in those institutions from the debt supply or the credit guarantee platforms to mobilize more localized or capital funding. And as we showed earlier on the slides, the two of the challenges that come on top of why the institution don't get into housing is the capital side, and the second is the capacity side. So that is where I think that comes in. Uh, the cost pattern, I would say, is getting a service that is recognizable and that gets an expert in place. There is a cost tag that is attached to it. So I would say an investment for a large size institution would be anywhere between a 70 to $150,000 for the product design phase. But let's not forget, the returns are huge. And when you look at the returns, it's about designing profitable and sustainable financial services. The next question, Jiten, do you want to add something to that?
Yeah, I think I just wanted to add one more experience which we had. So what we have realized is we have to fit the housing microfinance offering into the core operating model of a financial institution, right? So we should not be aiming for altogether a disruptive innovation. It should be a sustained innovation where we are trying to fit the product into their already established distribution network. And that has been, I think, one of the biggest success factors of a product. The other thing which we found was in India, we conducted an impact assessment study. The report is already available on our website. And we found that within a span of 2 years, the institutions were able to break even on the product cost. And after 2 years, any marginal revenue was actually a profit for them. So, and the threshold limit that we identified was somewhere between 800,000 to $1 million. So once you have attained that portfolio, probably you have reached the break-even point. Again, these figures may vary depending upon the operating model, but I think that study gave us good insights.
Right. Jiten, I see another question. What are the biggest concerns that MFIs typically have when considering launching a housing product? What are the top questions you hear? Do you want to take the first shot?
Sure. No, so I think one of the major concerns is, whether they would be able to fit the product into their existing structure, whether their staff would be able to take this up as a challenge. So that is, I think, one of the major challenge that we face. The other challenge is, on the information system side, whether my existing core banking solution can be reconfigured to offer a housing product. So yeah, I think these are some of the questions that we generally hear. And then the third is whether they really need a dedicated product manager to manage the end-to-end product development cycle within the institution.
Right. And on the top two, the first two questions that you talked about, I remember I was working with an institution. Interestingly, the institution is the I think the market leader in the country that I was working in. So the institution had two range of services. They had an income generation product at the microfinance level, and then they had an SME product on the other spectrum of the product offering. And when we introduced the housing finance product, the biggest concern of the institution was that why are you helping us take a simplified approach? Because of the experience that we have with MSME, things are already complicated and we have the capacity. So as you very well said, that trying to understand the operational structure of the institution brings in that initial confidence that the institution requires, because they do not want to disrupt their existing environment when getting into a new business model. And it's also important to remind the people who are into the product design phases is when you talk about pilot testing, it's not about covering the whole range of the pilot phase before recommending changes. The pilot testing has to be an action research project in itself, so that as soon as you see any bottlenecks, as soon as you see any capacity constraints, as soon as you see any risk, try to address us there and there. Because if you're able to address those bottlenecks at the very early stage of the pilot, that would give you enough confidence to take the product at a greater scale after the pilot ends in a 6 months or a 12-month period. So I hope that answered the question. Um, in the end, we are extremely grateful to the e-MFP, the European Microfinance Platform, for giving us an opportunity to interact and share the knowledge that the Terwilliger Center has gained by working with over 100 institutions globally, ranging from microfinance, housing finance company, rural banks, and cooperatives in Latin America, Europe, Middle East, and Africa, and definitely the Southeast Asia region. Um, Housing, as I've said earlier, even by working with 100 institutions, we have not even made a drop in the ocean. We have to look at housing not just from the lens of financial inclusion, but housing does provide an investment opportunity to both the capital providers, the development finance institution, even the public institutions to make housing and shelter accessible to their the lower income communities and the low income citizens of their countries. We look forward to continuing the dialogue with other uh, sector partners within the financial inclusion space, within the housing ecosystem, and within the financial ecosystem. Thank you once again for joining us today, and it was a pleasure to share our experience. Thank you so much.
Thank you, everyone. Bye bye.